Tax news in Latin America. Argentina, foreign trade amendments. Argentina's government has passed new foreign trade measures which intend to facilitate imports while eliminating fiscal deficit and managing foreign exchange controls. In this video we will provide a summary of main amendments to foreign trade in Argentina. Exports Incentives Program. Exports are subject to a preferable foreign exchange rate based on an 80% official exchange rate, post 60% devaluation, plus 20% blue chip swap rate. Increase in imports foreign exchange tax. The tax applicable to foreign exchange transactions through which importers access to foreign currency has been increased to 17.5%, from former 7.5%. This applies to most import, transport and freight transactions. Access to the foreign exchange market for the import of goods. No prior authorization is required for new imports of goods filed with customs as of December 13, 2023, subjecting payments to a specific schedule between immediate access and 180 calendar days, depending on the goods involved. While insurance and freight is payable upon first access to foreign exchange market for new imports, any pending transactions and most imports relating to filings made with customs prior to December 12, 2023, require authorization. Access to the foreign exchange market for the import of services. Services payments accruing as of December 13, 2023, do not require prior authorization and are subject to a specific schedule of up to 180 calendar days. Obligations arisen before such date are subject to prior authorization from Argentine Central Bank. Tax Authority and Secretary of Commerce have implemented a new registry which simplifies imports procedures. Outstanding imports debts should be filed by importers. Pending goods and services imports bond. The Central Bank of Argentina issued a bond nominated in dollars with maturity October 31, 2027. It can be acquired by importers and paid in pesos with an interest rate of up to 5%. Certain taxes can be paid out with this bond. However, this bond is subject to the import's foreign exchange tax if acquired after February 1, 2024. The Urgency Executive Order. The Urgency Executive Order 70/2023 signed by the President of Argentina established a deregularization of foreign trade among other economic issues. Now let us review Chile. The Chilean Tax Authority has updated its catalog on tax avoidance schemes which intends to detail structuring and factual situations where tax risks may be assessed through the anti-avoidance regulations. An overall of 85 schemes are listed, among others, the following. Capital Gains Scheme. Corporate reorganizations to offset losses. Equity transfers minimization and/or restructuring of underlying assets, and assets transfers minimizing income tax. What is happening in Colombia? Colombia has set forth its tax and transfer pricing compliance deadlines for 2024 and subsequent years. This includes transfer pricing local and master files, CBC reporting other taxes filings based on tax ID numbers. Please be aware that Colombia income tax returns are generally due in April while income tax and surcharge installment payments arise between February and June for large taxpayers. Non-residents with a significant economic presence in Colombia must file in April and may opt for bi-monthly presentations. Transfer price filings are due in September. Other taxes filings include foreign assets return, April/May, value-added tax, bi-monthly, for months and foreign services filings, withholding tax, wealth tax and stamp duty. Let us see what is happening in Peru. Tax authority in Peru has issued a ruling establishing that capital gains from an indirect transfer of shares of a Peruvian legal entity are subject to tax in Peru under the double taxation agreement existing with Chile. Such tax treatment was construed from Article 21 of said agreement regarding other income taxation. This interpretation is certainly innovative given the fact that a specific capital gains section rules the agreement, such as Section 13, which has been completely disregarded by the tax authority, and that there are precedents issued by the same tax authority stating the contrary. What is happening in Ecuador? Ecuador has passed a new tax promotional regime for the energy industry which includes the following promotional benefits. 100% additional depreciation and amortization of investments relating to distribution of renewable energy. Additional tax deduction for investments in infrastructure for the distribution of energy to isolated customers. 0% value-added tax and consumption tax exemption for electric vehicles. 0% value-added tax for solar energy generation and application of tax amnesty for tax debts outstanding as of December 31, 2023.